Well, next week I head out to Australia. I'm leaving the States, actually Puerto Rico, on the 14th of November, arrive on the 16th in the morning, and then I'll be doing a 5-city tour, starting in Perth on the 18th, then Adelaide on the 20th, 21st back to Melbourne, and then Sydney on the 22nd, and Brisbane on the 23rd. So as usual, this is going to be an intense travel, intense speaking, and normally we would have done this probably early to mid next year on our normal schedule. We go to Australia every year, year and a half or so, to keep our subscribers and followers there updated. But we're coming back a little early because something has started to happen there. Real estate has started to crack. Now, it's been maybe 8, 9, 10% in Sydney and maybe 7% or so in Melbourne and less so elsewhere. Perth has been hurting for a while because they're more exposed to the commodity bust. And of course, that's natural. But this would seem like, well, that's not that big a deal. Well, it is in Australia, as our Australian subscribers and followers know, because they are the Teflon market. They are the most overvalued, the hottest real estate market in the world, only second to China and Hong Kong and China. Because they have such strong immigration from Asia, that feeding their markets, better than average incomes and education of people coming in from overseas, higher percentage of their population, and that has kept their demographics strong and their demand for real estate strong. And of course, the foreign buying, especially with China being the leader of that in the world, is also strong in Australia because that's in their backyard. And Australia is a very attractive English-speaking place with good universities for Chinese to send their kids and to buy real estate and speculate and transfer money out of their country into. So that's what has made this market so hot. You have to realize Australia has not had a recession in 25 years. That's how strong their demographic trends are. The rest of the Western world and developed countries and Europe and even East Asia, Japan, and increasingly Taiwan, and after this year, Korea, all have declining demographic trends. Southern Europe is particularly bad, and Central Europe, Germany, Austria, etc. And here is Austria. Australia's got these great trends. So that's why no recession. Their real estate barely went down in the great financial recession, the GFC they call it there, in 2008 forward. So this is a big downturn, and as I've been saying in Australia and pretty much around the world, this real estate crash globally is coming from the top down. The last one, which centered more in the US and Ireland, in Spain, came from the bottoms up more from bad lending and foreclosures and stuff, subprime mortgage loans defaulting, that sort of thing. But it is important to know that well before the top, real estate peaked in early 2006, and we called that in late 2005. We warned our subscribers that was coming, and it did, right on the heels. It peaked well before the top in stocks in October 2007, well before the recession started in January of 2008. So this is a warning signal to the world. Australians are concerned because they're not used to seeing real estate go down 7, 8, 9% in a leading city like Sydney. And in the poshest suburbs and beach areas, it's 15 to 19% in Sydney and Melbourne where the declines are strongest. So this is serious. And they're worried, and it's also a sign to me, though, that, hey, another example of real estate starting to crack in key places around the world. It started to crack in places in California, especially Southern California has been weak. It's been cracking in London in parts. It's been slowing, especially in the high end in Manhattan. So this is the beginning, and you expect in these times real estate to lead the downturn and the great global crash we're having again. Because our stance on this. We did not deal with the debt. We did not deleverage debt, restructure debt, do all these things. We didn't really pop the financial bubbles enough back in 2008-9. So now we're going to have to do it again at much higher levels, much greater bubbles. And real estate is way more overvalued now in Australia. Our Canadian neighbors have the same problem, especially in Vancouver, also Toronto. I mean, valuations way higher than the U.S. ever saw. Household debt ratios way higher. And of course, Australia leads this. I saw a Morgan Stanley study showing that Australia had the highest real estate deleveraging risk in the world at this point, even higher than China. Even though China's valuations are higher, China's economy is even stronger and they've got more control, although I don't believe that. I still think, of course, China's going to do the worst in it. So again, this is an important time to update our subscribers and followers in Australia. I hope people will turn out for this. You just go to goco.au.com to register. I'm sure the tickets are going fast there because they had a whole 60-minute special in Australia. And this is unusual because Australians and the media there and the politicians and, of course, the real estate industry have fought me and people like Martin North and John Adams there that have been warning about this real estate crash. And boy, we are the extreme minority. Nobody wants this bubble to end. It's been the best thing to happen in Australia. Everybody's been making money hand over fist, sitting on their couch watching TV. Of course, nobody would want that bubble to end. So, but 60 Minutes came out with a strong statement saying, no, this is real this time. And the forecast from Martin North there was that real estate could go down 40% just to get to fair value. Well, my forecast is higher than that. I've been saying 50% plus in the major cities because when things get overvalued, they go the other way and they get undervalued a bit too. So this is going to be serious for Australia. They have, again, much more of their net worth, way more in real estate compared to stocks and other financial assets in the U.S. and most other countries in Europe. They have, obviously, the most consumer debt in real estate, and their banks are most exposed. So even though Australia has much stronger demographics, will not see as deep a recession probably even with this real estate crash, will come out of it much stronger in the end, no question about that. They're going to feel this one, and especially households. So again, we're over there to warn Australia, let them know how this is likely to unfold, but it is a sign to our subscribers everywhere, especially in North America, that this whole deleveraging is starting. It starts with real estate, it starts on the high end, and it works down into everyday houses and into the stock markets and everything else. So get ready, as we say, whether the markets have just peaked in the U.S. And most places in the world, and here in latter part of 2018, or if they're going to have one more run after this correction here and peak late 2019, this is coming, and it is going to be worse than the GFC, worse than the 2008-9 crash, deeper in unemployment, deeper in real estate declines, and a lot deeper in the stock market. So we'll keep you updated. And for more updates and financial news every week, click on the link below.